Good day, trader. My name is Vasco Smart FX. Welcome to my YouTube channel. Right, welcome to my video. Right, today we'll be talking about the weekend trade recap. So, looking at the trade we took during the week and explaining the strategy behind the trade and the probability behind the trade. All right, so we're looking at this particular good trade. Of course, I'll be making use of good. So, looking at this particular good trade here, and let's get to the charts. All right, so this is the particular good entry here by, because this chart here is what I'm using and it has a lot of annotations, so I don't want to delete all the annotations, so I'll be making use of a new chart so you can study the chart together. All right, so this is a new chart here. So this is a new chart, right? This is a new chart here. So the main strategy I use, I'll start from the trend. So which means I have to start from the higher time frame, right? So look at what is going on the higher time frame. Then I use the other flows. Then I use the SLP. So those three things comes together to give the outcome of that particular trade. All right. So first thing I go to the daily. Let me go to daily first. So I go to the daily chart first. So on the daily chart, I talked about two things. I talked about the external order flows and the internal order flows. But as a day trader, I don't expect to focus on externals when it comes to looking at higher time frames. You focus on internals, and that is what we call the candle science. The candle science talks about how you can analyze a candle, predicting what the next 2, 3 candles is going to do by what? By analyzing the previous 4, 5 candles, right? CRT is under candle science. That's when you analyze the candle. It talks about making use of one candle to talk about what the next candle is going to do. As a day trader, you don't need much information about what the years, month is going to do. You also don't need what the week is going to do. The next week, the next 2 weeks, something like that. Very, very close, so that you can focus on what are we doing now, not what we have done in the years past, something like this. Oh, we are bullish, we are bullish. But when you zoomed in now, you look at what is happening now, right? So let's analyze this particular chart here. First thing I can see is the market has been breaking. Market has been breaking every lows. Every lows has been broken. Every highs have been protected. I talked about this in my last video, right? So, but I just want to reanalyze it, okay? Because it's a new chart. So, but there's a confusion at this particular level here. Market break this high. People think, oh, now we have an MSS. Market can become bullish and going bullish, right? I also talk like that. But something I have to say here is that, and I've studied so far, is that in this bearish, we have a bearish trend first. So this all bearish moves that happens here, we have two bullish candle in the range here. We have two bullish candle in the range. The first one, the second one, let me just draw it out. So we have two bullish candle in the range. This particular pullback here did not invalidate any of the bullish candles. Any of the bullish candle in the bearish range is still being protected, and they serves as significant order blocks. They serves as a significant order block. They can be made use of. This is a daily candle here. This is a daily chart, and we have another flow. So which market? The main market beat this low. Every bearish candle here, and we have two bullish candles. Those two bullish candles are protected unless market breaks it. When market breaks it, it shows that, oh, now we want to become bullish. But now if you look at this particular pullback here or a retracement here, it did not trade into any of them. It did not invalidate any of them. It just a pullback then trade. So to me, I count this particular high here as what? As a liquidity. Market just create it to have a liquidity, right? So that, you can see that it's being protected. Let me show you something here. I think, okay, yeah, this particular one here, you can see that the main market have another few legs. a bearish, bearish, bullish, bearish, bullish, bearish. So we have how many bullish in that range? We have one, we have two, and we have this one that started it, right? But because this both of them, like this is what is inside this, so I can call it what a proportions. You can call it a that's a proportion candle, right? Trading into a bullish candle. So I can make use of this particular one. Now you can see the moment market gives me another flex, the moment market comes and bring this the first bullish candle in the range of the bearish moves. The moment market breaks it, what happens? It gives a confirmation of what a bullish moves. And you can see then market begins to back towards to that level. You can see how market will trade back to that same particular level for what for a breaker block. Market, no, you study the daily candle. It gives you as a day trader. You call yourself a day trader. Then you need to focus more on the daily candle. Just focus more on daily candle. It gives a lot of what understanding. You can see this particular thing here. Market will trade back to this particular bullish candle for a breaker block. The market trade again creates a new bullish trend. Now you can see this bullish trend here. We have only one bearish candle in the range, which market was traded back. It was being protected. Market traded back and use it for a liquidity. You can see that shows how a trend is being protected. How that the candles, for example, now this particular bullish candle, that's an example of other blocks when it comes to daily candle. You have to have the understanding that okay, now we have a bearish order flow legs, but the bullish candle inside the range have been protected. If they have been breaking, they have been broken, then it gives me a confirmation of oh, we cannot be bullish. There is a probability of being bullish, right? It gives me a 50-50 probability of it. But right now, that this pullback here did not even trade into the blocks or invalidate it. Now it gives me a what? A 70, a 80-20, which means that I am bearish 80%. The bullish I'll be looking out here is 20% because I'm just only putting my bullish on because we have this pullback and we have this break. Even the break itself, you can see that it first took out the liquidity, then body break. So it's just a 20% bullish moves. All right, so now we have this. So let's go to weekly charts. So on my weekly chart, you can see that I have a what a CRT, a candle range theory. Market took out the liquidity in the previous candle, so this range of this candle will be my trading range. I've been taking out the low is the target, so this is CRT, and now CRT is under the what a candle science. Study the previous candle to explain what the current candle is going to do. That is what a candle science is just all about. Not like looking at the old trend or something like that, just focusing on the candles. What are they doing? What are they telling you? Right? But you have to do it on what? On higher time frame, daily, weekly, monthly. Monthly, if you are maybe a swing trader, but daily and weekly tells you as a day trader what you have to do. All right, so this particular year show me that oh, this is the liquidity we'll be looking out for the week. So which means that even the next week or the week we are currently in now, on Monday, I should be expecting a continuous bearish moves to this particular low for liquidity. So now going back to daily, you can see that the CRT being created on the weekly is inside what the bullish order blocks on the daily. You can see how the all just comes together to align, right? But one thing about it as a day trader is that you are still going to see some bullish trades during the week. It's not going to be oh yeah, I know you can focus on the bearish, yeah, which is very, very perfect. If you trade bearish in this whole range, it's going to be very smooth and not giving you an hard time. Yes. But you can still also lose a bearish trade here because you know the directional bias does not mean that the trade is going to align automatically. All right. So let's go into the lower time frame for other products. Alright, so we'll be looking at the other few legs. So I'll be starting from the 4 hours charts. So the 4 hours chart here. So we explained all this particular one in my last video, like this SLP here, the trade I took here, the bearish trade I took here, and everything. We explained it in my last video, so I will not be doing that. Let me just give when the week started. So this is Monday. So this is Monday. Yeah, this is Monday. So it's the week started from this particular level here. I took a sell here. I took a sell here, right? I took a sell at this particular level here. So let's go into the chart and let's go on the 1 hour chart. We just looking, we have talked about the trend. We know where market is going to. Yeah. So let me just um go to 1 hour chart. So the first thing I'm seeing on 1 hour chart is this key level here. I saw this key level here at this particular level, and the reason why I saw the key level, I talked about this on my channel. I saw this a bearish trend. Then we have MSS. Then at this particular level, I was expecting market to trade back into this particular level for a bullish retracement. I call something a correctional or OB. So this particular level here is a correctional key level. So the moment market trade into this sell, this I was looking at this sell for like this sell. I think I had to change. I was looking at that sell. Alright, so this particular trade was being taken from the sell. So I was looking at it. Let me just go back to the bullish. Okay. So the next thing I saw is I saw this bullish order flow legs. So I saw this bullish order flow legs, and this bullish order flow leg traded back to um, the bearish PY. I was expecting market to come to for sell, right? So, but you can see that this bullish order flow legs holds. Like market has not broken any of the bearish candle in the range. Even the bearish candle in the range holds for order block, right? So when the bearish candle holds for order block, I saw a trade at this part. Let me go to the trade I saw for the sell so that you will know the reason why I traded the buy. The buy is a correctional, which means that if they okay, let me just give this particular level here. You can see market get to my bearish POI. Then here I have what? I have an MSS. I have an MSS here, and I have a pullback here, a pullback here, or here. Let me use a pullback because this is what I saw here. I have a pullback here. Then I was expecting this particular level here. I was expecting this particular level here for entry. So this is the particular level I was expecting for. So let me go to 1 hour chart back so that I want to give you context. Yeah, you can see. So this is 1 hour chart. So this is where I was expecting a sell from, and you can see that sell. I actually gave the sell out live too. That market is going to come back there. That is where I was expecting my sell. You can see this particular level I was expecting the sell there. So I'm not doing it as okay, just anyhow zone. So the moment market respect this order block, I know that we are in a bearish trend from higher time frame, right? I know where we are going to, but you can't neglect, you can't ignore what market is doing on lower time frames. Market respect this bullish order block, right? When market respect this bullish order block, and I know where market is going to sell from. Like I know where, according to my analysis, where market should sell from, which I was expecting market to sell from. And market has not gotten there yet. You can see market did not get there with this. So I saw this order flows leg too. So I saw this order flow. The moment, let me use. So I saw this order flow leg. The moment market trade into this order block, market creates a new order flow leg. So this new order flow leg is where I enter my buy from. So don't forget the trend. the order flow legs, and the SLP. So inside this order flow legs is where I want to look for my SLP to buy to where? Buy to at least this high or this bearish level, but at least this high. So let's go to 15 minutes. So on 15 minutes, what I can see here is that market has been bearish prior to the moves. So you can see here we have a bearish move there. We have a bearish market break the low. Let me use black. Alright. So market break the low here. Market break the low here. A lot of lows have been broken and a lot of highs have been respected. So market break the low here, broke the low here. So you can see that we have a bearish trend, right? So the moment market now comes and break this high, so that is where I know that we have an MSS. Don't forget, okay. So don't forget we have SLP means structural liquidity and point of interest. You can go and watch my last video. I talked about the same thing. This same thing I'm talking about here. I used this another entry we get last week to talk about it. My last video, right? So you can see market breaks all the lows, and the moment market break this high, no, I did not use the week. No, 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 not the week. The moment market break it with the body, that is when we have our MSS. So that is when we have our MSS. This body is the MSS we are talking about. So the pullback, the first pullback is this candle. So you can see this pullback here is this candle. So that's our first valid pullback. So when we have a pullback, where is my POI? So this pullback is the inducement. So the structure, the liquidity is the inducement, and the POI. So the first thing I can see here is we have a breaker block here, and we also have another block here. But you can see the breaker block is overlapping with the other block. So that is why I'm making use of the breaker block. The breaker block is overlapping with the other block. So I will make use of the first one, which is the breaker block. So I make use of the breaker block and I put my stop loss below the other block, right? So where is our TTP has to be at least at this high or this bearish level high we are looking out for. So that is why or how I took the trade. So what is the probability of the trade? The probability of the trade based on the 1 hour. And I show you the 1 hour. I show you how the market respects the bullish order blocks on the 1 hour order flows, and market creates a 1 hour order flow legs too. So this shows that we have at least 80% on our side because we know where market is going for bearish. So 80% on my side because market respects the order flow legs. The previous order flow legs and market create a new one. So I have 80% on my side. All right, so this is the trade here. You can see it here. Oh no, no, this is not the trade. I took okay. So this is the trade here. You can see it here. The MSS, the pullback, and the breaker block. You can see everything here being intact, nothing, everything is the same thing. And where market was going, and all right, so this is the TP. Our market is the TP. You can see the inducement, the POI, the structure, everything intact, right? So this is my study chart. This is my study chart here. So you can see the trend, the order flow, the SLP. So this is my study chart. You can see how the sell. This is the sell I took. These are the buys I took during the week. All right, so that's everything. Don't forget to like, share, and subscribe. Yeah, I have some other trades too. Yeah, that I use the same strategy for. Even this BTC I was trading, I use the same strategy for it. You can see it here: MSS, inducement, breaker block. So don't forget to like, share, and subscribe. And if you want to join this Telegram channel, link below. Thank you so much.